Welcome back to Squawk with me, Bruce Whitfield. Time now to get to week's gainers and losers, looking across the top 100 shares listed on the JSE. Distell, FirstRand, HCI, RMB Holdings and Adcock all in the positive column. Let's look at it. I mean, surprisingly, David, considering the political pressure we've seen being brought to bear on FNB, a subsidiary of the FirstRand Group, they're both RMBH and FirstRand are amongst those top performers. FirstRand's up 7%.
I think there's a switch now into financials. That's
It's
the
been
hot
going
sector.
for the last
It
2.5
has been
months.
going, and I think it'll continue to go. I've been tortured with a lot of presentations over the last few weeks, and most strategists are saying out of retailers into financials. Financials look cheap, so I think you're getting that. There's a lot of money on the side, money that has been in bonds and has been out the market, and I think you're getting that rotation. And financials is going to be a big performer now, simply through the weight of money. You would have seen Investex has also had an incredible run this year, on the strength of just money flows. I'm still trying to find the results and why.
But I just don't understand how banks are going to make their money. Years ago, banks had corporate deal flows. They did lots of transactions. There was lots of trading on and off balance sheet. Their customers were doing very well and were borrowing lots of money and paying back the interest, which is always good for banks. And then things slowed down a bit, so they started raising their bank charges for business and for personal customers. And then that wore thin, and they've started having to cut the prices of their bank charges. And then they went into microlending. What is the next trick in the arsenal? Because it feels to me that they've done everything they can.
Yeah, and look, and over the last year or two, you also saw bad debt write-offs also increasing or getting better. So
yeah, absolutely. They managed to write back.
I think that's probably the area which would be okay for this year, and which would probably support the prices as well. But certainly, I don't think it's the most expensive sector on the JSE. I think it's probably fairly priced, while some of our retailers, etc., is probably overpriced. So you might see, as David said, flows going from those.
But then we're talking about
some of the others.
But that's the point.
They're not borrowing.
And we're talking technicalities rather than fundamentals. I look fundamentally at the banking sector, and I just don't know where the business there, when they open the doors in the morning, what are people going to come in and do to earn them the money that they need to earn to
That's
make
exactly
profits?
right, because they're going to go back to, they're being pushed by the regulators into old boring banking, where someone deposited their salary check and you went and you lent it out, and the gearing was like 8 times. There's nobody sitting. We haven't got those fancy traders down in dealing rooms, trading with your hard-earned salary and in some really dodgy deals.
You've got to keep them busy for 30 seconds. Yeah.
So it is a wonder. And even if we look at someone like Investec, and I know the asset management side is doing brilliantly, but you say, where are they in London? What are they going to do in London, or even what are they going to do here that's going to elevate them to the point that the market is suggesting? And I'm trying to think. I'm trying to use your logic to think it through.
Yeah,
I don't know.
Yeah, I just don't know where the deal flows. But on a technicality, switch out of retailers into banks, it becomes a trade rather than an investment proposition, and that's what's scary to me.
But even if we looked at some of Old Mutual last year or Sanlam and they had spectacular rises.
Yes.
Why? On the back of the market.
Yes.
The market
certainly,
went up and it pushed their underlying asset value up.
Yes.
They didn't go and sell billions of rands worth of policies and so on. To me, that was pretty muted. So
Yeah, that's
I
a
don't know what the
cyclical
real
industry
business
as well.
is.
Yeah, that's market orientated.
Yeah, absolutely. HCI, it's not one we see often in the top winners and losers, but here it is in the winners column, 6.5% up. This is one you actually like, Hebron.
Yeah, we started purchasing in December. I think if you look at the gaming industry, it's interesting, and hotel industry, it's a very interesting space. It had depressed levels for quite some time. There was oversupply for quite some time. So we like the stories where nobody else wants to invest, and so we like the story, and we think it's going to go and pick up over time. We see business going to City Lodge again. You'll see, just for instance, if you get 2% more occupancy rates, you get about 25% bottom line push through on your
The trouble with a hotel is you've got a fixed asset which is sitting there slowly mouldering away. The rooms have to be dusted, the beds have to be made, the geysers switched on. And the moment somebody actually goes into a room and generates you some income, that is profit. It's great.
Yeah. So we think those were depressed, so we think that will pick up. Over time, you're buying this HCI at about a 10.5, 11 P multiple, not a huge dividend yield, but they are expanding and buying aggressively into companies. We know
David,
that
these used to be communists.
I was going to say, you took my line. I want to say, I want to say, you know, these are communists come good. I mean, can you believe it? These are commies, and they're brilliant businessmen,
Yeah.
and they have built up a superb business, a lot of good underlying ETV. There are a number of other different operations
Look,
there. It's
the-
worth
the-
a look in.
most of the machines they do control
Yeah.
as well in South Africa. So all the gaming
That's under
they
the new
actually,
business, isn't
yes,
it?
they
I
actually
can't remember.
control. Then gold, Tokotsan.
Yeah.
They got some coal assets in there, which is interesting.
Fabulous. Okay, another one you don't like is
Yeah.
Adcock Ingram, up 5% this week. It's number 5 on the
You
gainers
know
list.
why?
Adcock is doing okay.
I just think that I wish Jonathan would start running the company properly. Jonathan, he's a lovely man, a great company, but they've lagged their peers. There's talk in the market of someone, and I better not mention it because I can get into trouble, because it's not that insider, but you hear in the market that someone's looking at it and buying up shares.
Ah,
You know,
we watch this space.
I
I don't
think
want to
that's-
get you into trouble.
That's
but
what
we
I say.
watch
I
this
think
space.
I don't think it's appropriate for me to say. It's not that I have inside information, but I might be off track. But I think those are the rumours in the market that there could be somebody looking to expand. He's very big business.
Excellent. Okay. In the olden days, people used to talk over the garden fence. We no longer have garden fences. We have big walls with electrified wire on top. So we need David just to give us some of the goss. And then on the negative column, lots of shares starting with A falling sharply. Amplats, Avenge down more than 8% each. Datatech, Wilson Bailey Homes and Mr. Price were down. Amplats is one we've got to talk about. Just maybe wrap up with Amplats. It's the week's dog. Hardly surprising. Mixed messages coming out of government. You've got Gwede Mantashe, as Secretary General of the ANC, saying we will shut down shafts and seize shafts and sell them. And
Take
you've got Jacob
licenses
Zuma
away.
and take licenses away. Jacob Zuma saying, "Oh, rubbish! We're not going to plan to do that." He's saying that in Davos. The mixed messages are coming through. Amplats is feeling at the wrong end of this particular one.
Yeah, certainly. And I think South African consumers are as well, because you saw the currency weakening about 6% on these statements that came out in the week. That's not positive for the South African consumer out there. But certainly, I don't think that's going to happen that easily. You just can't take away somebody's license after they've spent $20 billion on shafts, etc. So you just can't pull that back. And if you look nicely, Anglo is actually, I don't know how many, I think 27 billion rand last year in tax money, which it paid over together with royalties to the government. And I don't think you want to scare away
But that's the point.
a mining
and
house like that.
ultimately, I mean, ultimately, people are not stupid. Cool heads prevail. But it's uncomfortable in the interim, isn't it, David?
It is very uncomfortable anyway, but it's people are being scared off. We should have seen a recovery by now. We should have seen buyers coming in, and
And the platinum price has been running. Platinum price $1,700 rands week. The fundamentals that should support the share price.
Hasn't come.
Try and say that after a glass of something nice. But let's go do that now. I think we should go and have a drink because it's very late at night. And thanks to my guests, David Shapiro from Sasfin and Gerbrand Smit from New Economy. Join me again next week as we thrash out the latest from the market. We look at the top winners, we look at the top losers, and we try and find opportunities for you in which you can invest. It comes with a health warning, of course, because we know now David Shapiro's scientific, let's get the darts out approach. Plus, of course, 4.5, nearly 5 decades of experience. You'd never know it.